Let's welcome Ed to the show, man.
Hello.
Ed, there he is.
Welcome.
Hey, how are you?
Thank you
We're
so
good.
much for
How are
being
you?
here, man.
All right, I'm feeling you though. I'm in LA and it's actually a little cold, so I got my swag on,
Oh, I
and
love it.
keeping that heating bill low because we're all tightening the belt, during this bear market, right? So
Exactly, man. You just got to wear layers. You layer up, you're all good. You know what I mean?
Yeah. So yeah, good to be on here, guys. But yeah, I had heard I got a little bit of insider information that Jimmy two times you ask what our favorite songs are. So
I did. Well, yeah, I always ask for a request. Yeah, you did. You got it. You got the jump on me there. So
I front ran you, man. I front ran you.
You got all the info. You got my number, man.
Yeah, I did. And for whatever reason, I understood the vol as well. So whoever's doing this drinking game, I'm just throwing it out there randomly to screw you over.
There you go. That's shot number one for our audience.
Shot number
doesn't
one.
matter.
Yeah,
Somewhere out there, it's probably the appropriate time to take a shot. So
it's 5 o'clock
Infinite
somewhere,
Demon.
right?
So shot number one right there.
Shot number one.
Yeah, this looks like a fun beverage, but it's actually just coffee. It's a big fake out. You know what I mean?
Like
I have my Starbucks free cup over here. See, more swag. I'm just a swag man, and I got a lot of caffeine in here. I just got like a double shot of espresso, so I'm ready to go.
Very
That's
nice,
what's up, man.
Very nice.
That's how we party over here too. So
It's
it's
exactly
perfect.
that time of the day. To be honest
Yeah.
with you, tough couple days. To be honest with you, look at where the markets are. Look at all the
Tell me
things.
about it.
And we're obviously building, right?
Yep.
And you care about a lot of things, you do a lot of things, but the outcomes take a long time for them to occur.
Right.
So we're sort of doing what we know best, kind of like you guys, Ed, to be honest with you, continuing to build and continuing to show up for the community and talk about cool stuff.
For sure, definitely understood. I mean,
Yeah.
it is crazy how much the community has come together. I think around building right now. I would like to see, of course, more excitement. I think that
Sure.
it's kind of hit a lot of people in the gut, and they're having a tough time right now. So I'm not sure what the right approach is to kind of rally people around this. But I mean, the only thing that I could say is we're all having a hard time. Like it's
Oh yeah.
it's difficult for everyone, and there's a lot of great teams out there who I know of, and it's tough with financing and everything. It's tough to be in a bear market.
Absolutely.
So my heart goes out to everyone, and prayers up.
Yeah,
absolutely. That's why we at least got to get the vibes going. You know what I mean? So at least we can at least have some fun on the turntables while we're in the
exactly.
Bear, you know what I mean?
There you go. Yeah, we can have fun on the turntable.
As the
I have
guitar.
a bit of a theme for you right here. So a little bit of a.
Wow, that's the first.
A little bit of calming guitar.
There we go.
Nice.
I love
That's
it.
very nice, man.
I
was kind of tired of this hip hop club stuff that this Jimmy Two Times guy keeps playing.
Yeah.
So we appreciate you bringing some color and difference. I guess.
Who is this Jimmy Two Times Joker? He's always playing that rap.
I'm gonna start calling you Jimmy Two Timer.
Well, I have been called that before. I've had some ex-girlfriends that would love to talk to you.
Oh
about that. No, I'm just kidding. I'm a nice man. So Ed, this is awesome to have you here, man. Maybe we could get a little bit of background on you. I always like to get the people behind the projects. If we could hear what your background is. How long? First of all, actually, let's get this out of the way. How long have you been playing guitar?
Well, guitar, I should say it was kind of on and off. I used to want to be a conductor, actually. So when I was in college, I took a bunch of music theory courses and conducting classes. So I'm like a classical jazz boy, but I like a bunch of different music. So when somebody told me this, when I was trying to front run you with respect to the music that I like it's literally the hardest question for me. I cannot answer what's your top 3 songs or top 2. I'm like, I don't know. I can give you some people, some composers, but actually, if a good background track right now would be Miles Davis' Kind of Blue album. That is an absolutely wonderful, very chill, and it's very, very appropriate for everyone going through this bear market.
So
just Kind of Blue, just Kind of Blue.
Well, yeah, I mean, and that's a classic. I mean, that's one of my favorites. I used to put that record on quite a bit. What's funny is that's not on this record show.
Shiny cakes, yes. Frank Zappa.
Ooh, some Frank
Avant-garde. Love
Zappa.
it.
Okay, I see you. Shiny cakes, great taste. Yeah, the Miles Davis Kind of Blue actually is not on this record shelf.
Ah,
It's in my no. It's in my living room because I listen to it on the hi-fi. You know what I mean?
ooh,
So,
nice.
but I do
Classy.
have it on the laptop. We're all good. I got you covered. We'll do some Miles Davis. Yo, I got Miles Davis
Let's
for days, man.
go.
We can do some
Let's
sketches
go.
of Spain. We can go all over the
And
place.
I'd like
You
to
know what I mean?
request a Dave Brubeck song after, please.
Oh
Yes.
yeah, of course I got Brubeck. Come on, but let's
go.
get back to the people behind the projects, man. We want to hear
Absolutely.
about how you got into crypto, how you started Aero Markets. Like, just give us the story, man. We just want to get to know Ed, the people behind the projects.
Yeah. So, I mean, we've been working on Aero Markets for a while. It's actually surprisingly very challenging to make an options protocol,
Sure.
especially if it's an AMM protocol. So, AMMs have this feature where you are standing there ready as a market maker. You know, just think about what a market maker's job is to submit bid or asks for a bunch of different option contracts on a bunch of different underliers. And when you do that, you're inherently taking on risk. And especially on the writing side, there's this potential of unbounded risk. So, for example, call options. For those of you who do not know what call options are, I'll give you a quick and dirty example. Suppose that we're looking at
one thing I'm going to mention. If you can, before the call variant, if you
Yeah.
can just talk about what an option is first.
Yes.
Again, I don't exactly know. So like go from the beginning. Yeah.
Yeah, for sure. So an option, I'll have to take my hat off for that one. An option is an opportunity. It's a promise. I like to think about them as promises. That when you buy it, you're being promised a certain return if an underlying reference asset goes above or below a certain price at a certain time. That reference price is called the strike price, and the time at which it should happen is called the expiration time. So you're given this promise, and a good example, there's two main types. There's a call option and a put option. With respect to a call option, that's on the upside. So what you could do is you could say, all right, let me pick my strike to be around the money, which is what, like around 11 or 12 right now for a Vox. And then an expiration of 2 weeks. In 2 weeks, if it goes up above, let's say 12 as the strike price, you will be paid off anything above that. Now, why would people want to do this instead of just holding the asset? It's a lot cheaper. So there's this thing called embedded leverage inside. And this is one place where options really shine. And in traditional markets, retail has really captured the strength of this. So, you might say, well, okay, I understand leverage, and it's maybe even clearer with respect to things like perps and futures. So, why would you want to go with options? Well, one of the things that's tough with something like perps is you're asking to get liquidated. If let's say you had a horizon like this, like you wanted to hold for 2 weeks, and you had something like 50x leverage, in the meantime, let's say you were long, you could have had a streak of just downward movements and just gotten liquidated, and your position's gone. And even though it recovered and it bounced back, and you would have been right in 2 weeks, you're out of luck because you were liquidated.
Now,
So
this part of your story, I guarantee you, everybody in the chat, it resonates with them, or it resonated with them, I should say, at one point in time.
yeah,
Everybody has this education tax, I call it, where when you first mess with these loan protocols, you'll learn about it fairly quickly.
That's right.
But
Look, it's tuition, guys. That's how I like to think
yeah,
about
it's
it.
education
okay.
tax,
We've all
right?
gone through it.
You
I
live and
cannot
learn.
tell you how much money I have lost with different, financial instruments. So, and since then, I like to think I've come out stronger, but to be seen.
Right.
So yeah, this is a wonderful thing about options. You can buy this bet. You can buy this, as they say in the more formal academic literature, this contingent claim that's contingent on what happens to the underlying asset at a certain point in time, and you can pay a lot less for it. So instead of buying the underlier, you can get this, you can have a certain time exposure, but where are the risks involved? Getting that timing right? You know, like how do you pick that expiration time, and how do you pick that strike, that reference price? So those are the areas where there's a lot of play that comes into how you manage that risk, how you bound it. One of the things that we're trying to do at Arrow is walk people through a way that you can combine options to limit some of these risks. And of course, when you limit the risk, you limit upside, right? But to try to go through these different scenarios with people and say, all right, well, all right, you know, this option has the potential to pay out huge sums of money, but hey, look, you can lose. And here's another one where we might bound how much you can make, but you pay less that you can lose in the meantime. But the nice thing about options, again, is just you kind of, to use the infomercial term, you set them and forget them. You know what I mean? You buy them when you're on the buying side, I should say. You buy them and you just leave it until expiration. You can see what happens. You can trade dynamically, but if you want to just have that kind of bet for that expiration, you can just leave it, not worry about liquidation at all.
And like, you know, I just want to emphasize, most people that don't exactly know how options work or what they're used for will typically say, oh, options are complicated, risky, etc. assets. But once you understand the very basics, like once you're able to picture what a put or call payout curve looks like,
yeah,
and if you try to just use it as an additional tool to your general activity, whatever that may be, it's a wonderful tool to manage risk, right? Like managing risk is a very front of the mind concept today. Like we've seen all sorts of crazy things that occurred, and options, when combined with traditional investing, is a very nice way to dampen vol, which I'm going to ask the definition of from Ed. You know, hopefully, actually, I don't know. Does saying vol count for me as well?
Yes, vol.
Yeah.
Vol.
Oh, there you go. There you go. The audience is wrecked now. But anyways, managing vol and dampening, you know, volatility of returns, right? So in that sense, it's very valuable to sort of understand what it is as a part of people's financial arsenal. Like on our quest to become financially literate, options are important, especially once you understand the underlying assets. Having that as a part of your tool set is, you know, is a good thing, basically.
Yeah, no, for sure. So one of the other user interfaces that we're working on right now to guide people through this risk management aspect is a hedging workflow where it connects up to your wallet, our app. It looks at the balances of the tokens that you have that are offered on our platform versus USDC. And then you can pick up protection on the downside of your portfolio. Let's say like a 25% drop on where it currently is, 30% drop, so on and so forth. Now, like insurance, you can think about options as insurance, especially put options. So I described call options earlier as the bet that pays off when the asset price goes above a certain reference price. But there's also put options where you get paid off if it goes below. So options also provide this opportunity to make money from shorting, or as an alternative to shorting, I should say, and as a leveraged alternative.
Yeah.
So, you know, a lot of the time, other than perp protocols, you can't get that type of exposure. So options provide you another way to get this. And what you can do is, if you're long, you can just pick up some protection. Maybe you want to pick up just some. You know, it's expensive to pick up full protection, which would be like just a long put at the money, as they say in our lingo.
Sure.
But if instead you just pick up a put spread, a long put spread that protects you against 30% downside, well, you know, maybe there's going to be a big market crash. It'll go down 50%, but hey, you got covered for 30 at least.
Yeah.
So
this is what I was going to give an example of, right? Imagine AVAX at, I'm going to pick a number, 144.36.
Yeah.
Imagine that's where AVAX is, right? And obviously, folks who build on this blockchain know how good the tech is, and we have a long-term belief that AVAX is going to be valuable. But once you have that historic giant bull run, okay, maybe I should purchase a, you know, as Ed said, protection 30% below where we are now, and look where it would have gotten you, right?
Yeah.
This is the reason why we need protocols like Arrow, which give you a decentralized mechanism through which you can acquire this type of protection for your long-term investment beliefs, right?
Yeah, for sure. For sure. And the other thing that you mentioned, Firestorm, with respect to vol. And I see Infinite Damon, you're still actually quite with it after all those shots. You're posting about put debit spreads. That's impressive. Okay, I'll just say
that's pretty good. That's pretty
yeah,
good.
that's pretty good.
Well,
That's
can
pretty
we get
good.
a confirm that he or she has had enough shots already? Like I
Yeah,
counted
seriously.
4 so
Because
far.
like
we need
Can we like get a
pictures.
confirm here, please?
because we do have that game. There is a game going right now, guys. Let me see if I can find it. I mean, let's find
I'll take a
video
sip
real
of
quick.
coffee at least.
Yeah, see, I got mine too. And it looks like we do, just a reminder to the chat, if you do have any questions for Ed while we're here, it looks like we do have one in the chat just asking how Arrow Markets intends to stand out from competitors.
Yes. Good question.
And you know, chat, if you guys got any other questions, feel free to drop them in there.
Yeah, let me just finish really quickly.
Oh yeah, absolutely. I didn't mean to interrupt.
No worries. On this idea of volatility, because options are also one of the only ways. Well, there's a lot of financial instruments out there, but one of the most popular ways, I should say, to bet on vol. There's also vol swaps and stuff like that, as I'm sure Firestorm knows. Very familiar with all of these, but options are a popular way to bet on volatility in the markets. So one of the things that you can do, let's say you don't necessarily have a view about if it's going to go up or if it's going to go down. So put or call, who knows, right? But you can buy a put and a call at the money, and you can get this payoff profile that if the asset moves in either direction from where it's at right now, you'll make money. Right. And so those are really good. You know, those could be good for events, but I will caution people that there is a little bit of they do become expensive around known events. So, you know, sometimes there's no arbitrage, right?
Now, imagine the following scenario, right? And again, I'm just making these things up. Imagine an asset that goes from 0.5 at private to 2 to 144, right? Mm-hmm. Like when you see giant moves, it implies volatility, at which point maybe betting on volatility is an interesting strategy. And again, I strongly urge everybody in the chat, everybody watching the show, to go look at, for example, the Arrow Markets Twitter account, because they have very nice, clear pictures of if you pick a specific structure of a option trade, what kind of a payoff does it give you? Like it has the protection aspect where you're long and then you protect the downside by cutting off your losses. Or the more interesting thing to me is what just Ed mentioned, right? We know crypto is extremely volatile market. And if I have reasonable belief that the market is not going to stay where it is, whether it's going up or down, maybe you don't know, you just know that there's going to be some crazy thing that's going to occur, then maybe an option that gives you exposure to the volatility itself is the way to go. It's like a, you know, fantastic financial product for people to, again, learn and add to their arsenal.
Right. And you can go on the opposite side too, which is really cool. Like suppose right now you're like, okay, we're going to be in a bear market for a while. All right. Things are going to be sideways. So what does that mean? Not much volatility, right? Just kind of sideways. In that case, you can do the opposite of what I just mentioned, like a straddle. There's several different, you should, for anyone who's interested, please follow us on Twitter. We go through a Trading Thursdays thing and go through each of these strategies, compare them. We'll also be trying to compile all of these on our Git book for the documentation on our website, so people have a place to try them out. And then we'll also be doing kind of cool things with quests on our trading competitions to get you to practice, to kind of like force people like, hey, you know, if you do this, you'll get some kind of bonus. So
Ed, dumb question, and I know it's partially related. Are you guys the first project on the Avalanche that did a trading competition? Because I can't remember an older trading competition from yours. Are you the first?
You know, I don't know the answer to that question. Okay. We should ask some of the folks at Avalanche, man. That would be really cool. Okay, we could have been.
That's we
did one about a year ago.
Yeah, because I think you know the way Avalanche ecosystem grew was obviously the C chain launched, then the bridge launched, and it was all about airdrops, etc.
Right.
But there wasn't so much about, hey, come and trade, have some alpha, show us your prowess type thing. And I think the earliest one I remember is the first one that you guys ran.
Right. Awesome.
Just throwing it out there. Maybe I'm wrong, but
that's cool
for the audience to check.
Yeah, and this is something that we're planning on keeping up in terms of the testnet. We want people to practice, even when we're live on mainnet. We want people to practice first, get a sense of how options work, and then come and go on the real thing, with real money. So that's where we're planning on keeping that around and available as a premier kind of paper trading platform. So let me get back to that question that it's been a while, but Jimmy 2 times mentioned about how we distinguish ourselves from other options platforms that are out there and other options AMMs. Well, what I'll say is we have a lot more flexibility. So, if you compare us with what's out there, most of the protocols, you're doing something like, let's say, Ribbon or Theta Nuts, where you're essentially selling options. You're putting up the collateral, selling options. You're participating in a vault, but that's what they're doing. And you don't have the customizability of what strike you want to do. You don't have also this customizability about what the strategies look like that we're going to be walking you through. So there's a lot more, I'd say, guidance on our platform. But with that comes more options, more user options, I should say, right? And also more options.
I think, and again, I don't know how much technical you want to go with specifically into your infrastructure, but one way I always thought about the Arrow Markets product is that it is a generic implementation of an options protocol where you can do whatever you want with it, right? It's flexible enough that it allows you to create all kinds of cool structures. And, it's unique in that sense because, I've looked at a lot of options vaults before, and most of them give you a specific option. Like you have to believe the bets that they're presenting you, and you can't say, oh, you say 10% I make money. No, I want to do it. Like you can't turn the knobs to create your own structure. Obviously, liquidity is a big challenge with respect to this, and which is what you mentioned as well, like using the AMM structure to provide that, and there is risk that needs to be managed. But the thing that, I've personally been quite interested and impressed by is the fact that, this flexibility aspect that you're mentioning.
Yeah. And with that trade-off, one of the things that's super interesting is in AMM actually provides the general public users the opportunity to back a market making strategy, which for the typical retail investor is super hard to do.
Exactly.
So there's two sides of Arrow. I really neglected to mention the other side here, but one side is what we were talking about, this ability to go out there and buy different types of options. But then on the other side, or you can also sell, but on the other side, it's like backing the AMM's quoting mechanism and its ability to collect premiums and manage risk. So that's an important part of the AMM providing liquidity. And if you want it to be passive, that's also a way that you can gain yield. Now, of course, when people do this, they are putting faith in the system. They're putting faith in that the system will, will charge the right premiums, will hedge, so on and so forth. Sometimes that won't always be the case. So there's risk there. I don't want to make it seem like this is a completely riskless product. That's not the case.
Sure.
But at the same time, this strategy, this delta neutral with some vega hedging, this is something that is usually typically too difficult for people because it's a dynamic strategy where you're quoting the options, you're collecting the premiums, and then you're hedging your risks. And typically that's been reserved for super high caliber market makers. So we're trying to bring that experience, that return profile as well to the general public.
Nice. I guess as fate would have it, I had like a breakfast with a gentleman who runs an options trading business this morning, and I was thinking about how professional options risk management is something that's fairly difficult to do, definitely not a retail type activity, and how you guys are basically creating a solution that has it embedded so that people can, choose to take specific types of products, and then the risk on the other side is automatically managed through your protocol and your partners, which I think is, again, unbelievable, because that's not how it exactly works in TradFi. In TradFi, there is one counterparty on the other side who manages the risk, but it's always unknown if they know how to manage. Like solving this type of a problem in a generic way is a monumental challenge, which Arrow Markets team is solving basically.
Right. Yeah, it's a tough problem, and of course, this is why when we first kind of come out there, we're doing a guarded launch. We're going to limit the amount of capital, limit the amount of risk. So that really in the wild, things are always different in the wild, right? You know, from our testing playground experience. So it's something we want to get right over time. And so that's one of the things that I'd really like to say is that we do look for that feedback from both our partners, from the community, and it's really important to understand the risks involved in the space as well. So yeah, definitely something that we're
Absolutely.
looking forward to building with everyone, you know, with as
Yeah.
much collaboration as possible.
We got a bunch of questions, by the way. So
Sure.
Infinite Demon is asking, didn't you make a bet with someone? I think he's referring to the bet that me and Tamer, who is part of A Ventures, made. We kind of said, hey, let's do the trading competition, see who wins. But I think shortly after the trading competition, there was like some extreme volatility that occurred. I think it was Luna or something.
Yeah.
And we never followed up with each other's performance. I've definitely participated in that trading competition. I wasn't top or anything like that, but I was profitable. That's all I remember.
Oh,
Yeah.
okay.
I probably got to go back and check. But thank you for reminding me. I will go back and see how Tamar's performance was. You know, Tamar,
yeah.
one of our
to be
guests.
continued.
Yeah, to be continued.
To be continued.
Now
we've actually had a pretty good track record of starting these competitions right around the time when there's like about a big crash. Like we also did on FTX.
Yeah, that's
like
pretty good, right?
It's like,
but I mean, look, that's a great thing because you offer products that allow people to bet on volatility.
Yeah,
And
that's
look,
true.
maybe there's a signal here. Hey, Arrow Markets is running a trading competition.
Right.
Yeah, and the first time we did it, like I will tell you that Luna one, the returns that people had, that if you just look at the
30,000%
leaderboard, it was ridiculous. Like absolutely, it was like okay. And then the next one got better at managing risk. In fact, the first one, it's not really fair because there was actually a delay in the Oracle, so some people figured it out and like kind of gamed it. But for the most part, and they were nice enough, to let us know. We also saw it. And this is one of the things that the testing is for, right? It's really for trying to figure out all the kinks, all the bugs that exist. And it's been very, very helpful to have these iterations through the trading competition.
Absolutely.
So we really appreciate it when people do that. And we do, we pay them in kind as well. Like we understand that like nobody has to report on these things, right? But we want to be able to be there and encourage people. So far we've been doing pretty well in the last ones. That risk has been managed a lot better, and but it also has given people the opportunity to actually take those bets, like you're saying, Firestorm, on risk. So it's pretty cool.
Yep.
Definitely, man. Shout out to Tim Shan in the chat.
Yeah,
our COO
I was
has
going
a
to
couple
say,
questions.
our very own Tim Shan. Tim Shan, is our COO for anybody who's not aware. So he obviously has a long tenured career in traditional finance.
Oh, nice.
Shout out to our new followers. That's our follower alert, everybody. The Mrs. Doubtfire. Hello. So shout out to our new followers.
Nice. So Tim is asking, are you planning to offer exotics? And what he means by that is like barriers, one touch, knock in, knockout type option structures.
Yeah, eventually, for sure. I mean, I think first would probably be some variance swaps before some of those. I think those are, at least from what's in demand in TradFi, those have a great track record. So that would be great to do, but there's all sorts of other things. There's Asian options, there's barriers, knock-in, knockouts. I mean, yeah, there's just a ton in options, and we do have it in the pipeline, but right now we're not like actively developing it. It's just, on the plans basically.
Got it.
Got it.
So I guess, the big question is, what is next for you guys? Like, what does the roadmap look like? What's the timelines around what you're building? Like, if you can give, and obviously, we run a Twitch show here. We would appreciate any alpha that you may choose to drop. We're never going to say no. We obviously don't want you to leak.
We're talking about a lot of alpha.
But we love alpha. Not going to lie. Our audience loves alpha. So
for sure. I mean, I think one of the things we're super excited about is the next generation. We like to think about it as the next generation of AMMs, and really what those will be hybrids. So it'll be hybrid AMM limit order book or limit order book AMM, whichever you want to. I'm talking to Dexla here, the king of limit order books. So I gotta be careful there which one. But we come from a traditional finance background. We understand how powerful limit order books can be.
Right.
And the other flip side of it is for things like derivatives, you get a little bit of this chicken and egg problem with liquidity, which is if you offer a limit order book, it's like, it's not necessarily if you build it, they will come kind of thing.
Sure.
So AMMs help kickstart that, bootstrap that initial liquidity by transforming passive to active liquidity. That's how we like to think about it. So the one of the biggest things in our pipeline will be that, you know, working on this hybrid approach. And it's something that, you know, we love to talk to you guys about, because we especially know all the good progress that's happening on the subnets now as well. There's a ton of opportunity to work together there. So I think, you know, we're super pumped about, you know, working together and then making something like a good, you know, limit order book for options that's low cost as well for placing the orders, or no cost, right? So that's one of the top priorities. In terms of launch of the current version of what we're working on, that is what we're targeting is Q1 next year. And there are some kinks to still be worked out, of course. So we'll be working actively on that up until then, working with partners, like I said, the community as well, to test out various aspects, as well as roll out a few different features. Another big feature that we plan on rolling out, this could be after launch though, is under collateralized shorting. So if you wanted to sell one of these options without having it, right now you can sell back. If you buy, you can sell back, that's fine. But if you have one of these, if you want to sell one of these options without having it, how much collateral do you have to put down? Well, do you have to do what a lot of the other protocols do, which is require that you have the full collateral, like the full underlier, for example, which would be like 1 token of a Vox, or the full downward drop from the price today to 0, which would be for a put. That would be a cash secured put. That's tough. Like, that's not gonna, it's tough for people to put in that much liquidity. So it's also important to create things that you see in traditional finance that have been worked on pretty well, like margin accounts, but are a little more challenging when it comes to how do you manage them on chain, right? Because you essentially have to have some off-chain elements that monitor people's collateral, and a lot of protocols do this in the perp space, so it's not unheard of, but it's just more complicated with options, what the risk profile is.
I guess, you know, the last question, you know, I'm going to ask before I turn it over to Jimmy and maybe the audience is, like, the biggest challenge that I personally see with respect to Web3 crypto in general is the fact that, you know, the big bull market that we actually saw was driven by folks who are in it for the very short, speculative money-making activity, right? Now that that's disappeared, you know, what I'm personally observing is even existing products that had massive usage, you know, during the bull market have lost a lot of users. So it comes down to us collectively to really push the educational aspect, right? You know, even like the traditional spot trading through a decentralized solution is extremely complicated. And what I'm seeing a lot when I talk to regular people, when I say regular people, I mean people who are not specifically in crypto, they think crypto is done. They think crypto is dead. When in reality, centralized implementations of stuff with you know, related to Web3 are dead, while DeFi and decentralized trading solutions like Arrow Markets or like Dexel or various other AMMs are alive. They're kicking, and they are alive. They're very well, right? They're operating. And this was, in my mind, a validation moment versus the alternative. And how do we break that barrier? Like, how do we get from, oh, crypto is bad, look at what happened to FTX, to, oh, wow, crypto actually would have solved what we've observed with FTX? Like, how do you guys go about solving this problem?
Wow, that's a tough question, Firestorm. I wish I actually had the answer, but I'll bullshit right now a little bit.
Please.
So, I mean, one of the things that I think is super interesting, we should caution people against, is that DeFi is not infallible, right?
Yeah.
Like, and we've seen it. We've seen it with Luna. That was the first thing that we got fucked on. But where you have more hope. Oh, I'm sorry. Maybe I can't curse. Hopefully, it's
no, you're good. Okay. You're good.
We get a fantastic producer. He'll take care of it. He'll make that a loved or something. He's gonna put something.
The FCC, they don't contact us anymore, man. We only had that one incident at one time.
No regulators watching.
Not yet, anyway. So.
I should say everything I have said is subject to regulatory approval. Okay, just to cover my bases. Okay.
Yes,
Twitch is
and
way
not
worried
financial
about
advice.
if we play
Both
Yeah,
of
copyright.
not financial advice. Nothing I've said is financial advice. Okay, so yeah, one of the things that's super important is, yeah, DeFi is not infallible, but at least it's transparent. Like, people can go in there, look at the mechanics and say, hey, I think that this thing is going to fail for this reason, and we can start a discussion about it. And people were doing that with Luna, right? It got drowned out with a lot of the hype, right?
Sure.
And to be fair, things like currency attacks and stuff like this, they're really complicated. I mean, even in the real world, they happen. Like, I mean, real world, I mean, like with cash from different economies, like countries have gotten really hammered from these different currency attacks. So for sure, it's a vulnerability, and for sure it should be discussed. That's just in the Luna case, but at least it's transparent. That's what I'm trying to say. Anyone can can audit it. And hopefully, as the system progresses, one thing that I've advocated for a while now, like about a year, has been, and maybe this would be from the actual ecosystems or the layer ones that we're building on. I'm not really sure where it'll come from,
Sure.
but we have the opportunity to have better stress tests than even the Fed can do. So one of the things that's crazy right now is I don't know, a lot of people in the U.S., regulated financial entities often have to submit these kind of response functions, these things that are like, how would we have performed under these stress test scenarios that the Fed gives them to feed into their risk management system. So they don't get full transparency, the Fed. Basically, they get some scenarios of what could happen. They're like, okay, suppose that this happens to the short-term borrowing rate or lending rate, or this happens in repo markets, or some liquidity dries up here in this part of the economy. What would happen in your system? Okay. And they collaborate with the OCC in order to audit the risk framework and all of that. But it's still very murky to the public. If layer ones, if we work with risk management research entities like Chaos Labs, or I'm blanking on I'm blanking on another name, a very famous one, Gauntlet. There we go, or something like Gauntlet. We have the opportunity to put through a scenario to several different interactive protocols that are composed together, and see how a type of macro shock would propagate through the system. Like we can literally simulate. It's not easy. It's freaking.
You could actually execute it, is what you're saying. Like we have test networks.
Yeah,
deploy code is open source. Deploy, chain them together, and run it. Versus when you do a stress test to a bank, you just ask questions.
Exactly. So the way that I like to think about it, so myself and our head of tech, our tech lead, we're both like deep into reinforcement learning. We do some pretty deep reinforcement learning research and stuff like that. And the way I think about it is, we can create an environment where we go through a bunch of different scenarios for the whole financial ecosystem on a layer one, and then see what the reactions would be to how the system interacts. But it's hard. It's not easy to do that. I mean, that's a difficult problem, but we have the ability to do it. We're way more transparent. It'll just take time. It'll take time and effort. And part of the problem in DeFi is that there's a free rider problem. It's hard to, since it is decentralized, how do you group together these resources to create this kind of regulatory, I shouldn't say regulatory, but like this risk management overlayer of looking at how everything connects together. That's what the Fed does with us. I mean, there's a lot of bad things that the Fed does, but this is arguably one of the really good things at kind of watching the risk over time.
I would argue that there are a couple firms out there that have started creating like a very minuscule part of this vision that you're describing. And they started in the form of identifying movement of assets from protocols to wallets to chains and whatnot. And now, you can go to one of these service providers, plug in an address, and they will show you a web of stuff. The next layer is exactly what you're saying. How do we replicate the same concept, except instead of wallets specifically, you connect protocols?
Yep.
And then you see the activity between protocols. And that is the regulatory tool, which allows regulators to understand flows of assets or activity and whatnot. And, one thing I'm going to tell you, while you're absolutely correct, this is a big problem. Think about how much money is being spent today on regulating existing black box style stuff spent by the actual parties like banks and financial services and whatever, and the regulators.
Yeah.
Imagine how big that number must be and apply that to the creativity of the builders that remain in the space. And then let's discuss if it can be solved or not. And my view is that kind of money probably solves anything in DeFi.
Yeah. Time and money.
Yeah.
Time and money. So, that's what we're hoping for, is that we're going to, I'm hoping that we can also create these kind of consortiums, these groups of different protocols where we can tackle some of these problems, because they cost a lot. Like you were saying,
Absolutely.
They cost a lot. And unfortunately, now is a time where I think a lot of people are turned off about the risk management, because mostly they don't understand what went wrong in crypto. So they
don't want to understand necessarily.
Yeah.
Look, it's much nicer to say wow to a headline than how
Right.
can we make this better next
Exactly.
time around type approach.
Yeah. For sure.
Anyways, Jimmy, I'm sorry, I got carried away with Ed. Ed is one of those few people that I really
That was
vibe with,
great.
so.
Why are you apologizing? That was we're gonna clip that and post that to socials. What are you talking
Yes.
about?
Let's go. It's all
Come
about
on,
that.
man.
Yes.
That was perfect. Chat, be sure to drop any questions you still have for Ed. He's still hanging out for a few minutes.
Sure.
Guys, while I still got you here, we did talk about your request earlier. We talked about some Miles Davis.
There we go. Okay,
And-
we got to have it play us out at least. You know what I mean?
I mean, that's like the perfect way to end the show, man. And you know what? It's so great because last week, one of our co-founders, Nihat, requested the Bobby Womack version of California Dreamin'.
Ooh.
And that was like a great way to end the show. So it's like these are great, like
Ooh.
ways to cap off that. Like I'm really into it, man. So that's perfect
Awesome.
request. So we already got your request.
Awesome.
But I need to know a couple things. Will you come back to the show and hang out with us, talk more music, play the guitar? Maybe we'll collab. I'll do some scratching.
Yep.
Something. Maybe. Can we do it?
Absolutely. I'm gonna have to prepare for that though. So
we'll do a sound check. We'll do a proper
There you
sound check, and we'll collab. You know what I mean? We'll get it going.
Absolutely.
But the other thing I want to ask you is a little more. I don't know if you want to say silly necessarily. Firestorm, you and I did this last week, but I'm putting you on the spot a little bit. But you know what a tinfoil hat theory is, right?
Oh yeah, absolutely. I'm all for them all the time.
All right. Yeah, I know. You got to wear your tinfoil hat, man.
I need something for this dome. You know what I mean? So
yeah, right. Yeah, I mean, I exactly. So, what I'm going to ask, what is your biggest tinfoil hat theory in crypto?
Oh shit, that's a hard question.
I know. It's like I said, I'm putting you on the spot a little bit. You know,
I think.
and look, I respect it if you want to decline. If you want to, next time you come back, you have something for us. But if you have anything right off the top,
I think one of the biggest things that hit me was with John McAfee. I mean, I don't know if you'd consider him crypto, but he was a big advocate. Very scammy, at times. Totally understand that. He was a character. Let me just put it that way.
Right.
With the storied past. But that was pretty shocking. I think that there was also I'm blanking on his name. I feel so bad. But one of the early contributors to MakerDAO, or co-founders of MakerDAO, who recently passed. And under very weird circumstances, when he was saying similar things,
his wallet, etc., was in his pocket and crazy stuff like that, right?
That's scary. So when I read about stuff like that, see it on crypto Twitter, that freaks me out. There's also weird stuff with FTX right now. Like who knows where some of these funds went? Maybe it was politically motivated, stuff like that. I think the questions around how the government is viewing crypto and its more covert approaches to handling it. I'm always a little tinfoily with that stuff. I get a little worried there, but maybe my paranoia since we're in the field,
it's well placed and well earned, to say the least. Right.
But you know, at the same time, I'm not going to say that, like, you know, regulators in the government don't have some good points. Like, you know, there are definitely some very valid points about being more cautious and having better, you know, risk management frameworks and stuff like that. So, like, there's definitely good stuff there. But with respect to tinfoil hats, yeah, I'd have to say the top ones would be like John McAfee, the MakerDAO fella as well.
Yeah.
Oh yeah, SBF not vegan. I'm a vegan, by the way. I think you guys might, or at least Firestorm knows. So I'm a big advocate, and now I'm gonna be really sad every time that I go to a conference and I mention it. You know, it always comes out when you're vegan. You got to tell people, just like now. I have to tell you, it's obligatory. Yeah, I'm gonna be basically slammed. They're gonna be like, "Oh, like SBF, huh? How much shrimp have you had? Did you eat 3,000 earlier today?" But anyway,
nah, man, do your thing, do your thing. But yeah, okay. So we've got that's Ed's tinfoil hat theory, everybody. Okay, well, thank you for that, Ed. I'm sorry to put you on the spot. I know it's like,
no, it's okay. If we had more time, I could go into even more. It's kind of like the composer and music question. There's too many.
We might have a new stream on our hands. We might have the tinfoil hat crypto.
At least the section.
Stream.
I'm feeling
look,
right.
Look, we need to go on Alex Jones, guys. Come on, time to go on Alex.
Oh God.
All right.
Well, you know, if they, okay. Anyway, I'm gonna leave it there. But well, okay. So we definitely got to have you back. I'm gonna play some Miles Davis for you coming up. But Ed Mehrez, co-founder of Arrow Markets. So nice to have you on the show, man. This was awesome. We got to have you back.
Thanks for coming, man. Truly appreciate it.
And we hope everybody who played along in the drinking game is not falling over. We hope you're, you know, at a comfortable level. But you know, you did say the magic words quite a bit earlier in the stream. So hopefully,
I won't say it anymore.
Yeah. So we're not even going to do it. I'm not even going to show it in the chat. We don't want people to get too rowdy, because I'm going to play Miles Davis to end the show.
Maybe,
you know what I mean? It doesn't.
Maybe we get you know, we ask our producer to cut the number of times the word wall has been said.
Oh,
that's a funny video.
Another shot of my coffee.
You just did
Boom.
it. Firestorm.
There you go. Oh, I'm sorry, guys.
That was
almost the end of the day, and you know where I am. So
exactly.
That just sent someone to the toilet. All right, they had to go to the throne. All right, they had to pray to the throne.
Well, Ed, thank you again, man. We'll have you back really soon. This was great.
All right.
So thanks for being here.
Thank you guys so much. Have a good one.
We'll see you later.
Take care. We'll see you again.